The S&P make another all-time high last week, and so did the Nasdaq 100 and the New York Stock Exchange Composite Index as well, but the Dow Jones Industrial did not. So does this mean the market is about to crash? Welcome to another S&P 500 analysis. Today is March 3rd, 2024. For the first 9 weeks in 2024, the S&P 500 was only down 2 out of the 9 weeks, and it's been up for the last 2 weeks. Now, last week, the Russell 2000 was the top performer with a gain of 2.96%, and the Dow Jones Transportation was the worst performer with a loss of 0.56%. The Nasdaq gained 2.04%. The Nasdaq Composite gained 1.74%, and the S&P 500 gained 0.95%. The New York Stock Exchange Composite was up 0.64%. Now, the Dow Jones Industrial is also had a loss of 0.11%. We're looking at the monthly chart here. The S&P 500 just put in 4 consecutive up months and is working on the 5th. But now for the month of February, we see that the Nasdaq Composite was the top performer with a gain of 6.12%, and the Russell 2000 was the second best with a gain of 5.52%. The Nasdaq 100 was up 5.29%, and the S&P 500 up 5.17%. The New York Stock Exchange Composite gained of 4.12%. The Dow Jones Industrial gained 2.22%, and the Dow Jones Transportation gained 2.1%. Now, for the year, the Nasdaq 100 is still the top performer with a gain of 8.78%, but the transportation is still down and it's had a loss of 0.42%. And looking at the sentiment chart here, we notice that the VIX and also the put-call ratio is pretty much status quo, unchanged. The market participants are still, complacent and risk on. And the up-down volume ratio is doing what is expected. It go up along with the market, and it went down along with the market. But it doesn't show a strong conviction to the upside when the market is making all-time high. And same with the daily advance in decline, showing positive market participation, but not showing a strong broad market participation when the market or when the index is making a new high. The new high, new low is still holding steady in a positive 200 range. Now, we're not seeing any divergences between the AD line and the S&P 500. They both are moving higher together. The Nasdaq up-down volume ratio is also behaving accordingly, and the daily advance decline is positive, but it is not showing strong broad market participation. And for the Nasdaq new high, new low, we are seeing a bit of an expansion, which is good. Even if this skips up, then it'll be positive for the Nasdaq. Now, the negative divergence continue to persist between the advanced decline line and the Nasdaq 100. Now, let's take a look at the 11th sector in the S&P 500. We notice that for the month of February, the consumer discretionary is the top performer with a gain of 7.89%. You can see that the relative strength, the performance relative to the S&P 500 is coming up. So it's showing a little bit of an outperformance here. And the industrial is the second best performer for the month, and it gained 7.18%. And also you can see that the relative strength is also starting to show a little bit of an outperformance. Likewise, for the material is gained 6.51%, and also it is showing some relative strength here. And you see this surge up on here, which is pretty positive. And for the technology sector, we see that it was up 4.7%. It also made a new all-time high last week. But you notice that the relative strength is not, making a new high here. So it is showing a little bit underperformance recently with the, relative to the S&P 500. But nevertheless, it is making a new high. And the communication sector is also had a gain of 4.59% and almost making a new high here. But we are looking at a little bit of an underperformance here on the relative strength. And the financial is also moving up, but again, we are looking at a little bit of an underperformance relative to the S&P 500. Now, the energy is starting to come up, and we're also seeing a little bit of a firmness on the relative strength here. And the healthcare sector is underperformed, but it's still in this nice uptrend. And notice the real estate sector, it is actually breaking out of this trend line here, so it could be starting a little bit of an upward move here, and we did see a little bit of a firmness on the relative strength in the last, week or so. And here the consumer stable is in this nice steady uptrend, but the relative strength is a little bit underperformed the S&P 500. Here we also notice that the utility could be starting to try to break out of this downward trend here, or this little bit of a pullback, but the relative strength is also kind of underperformed. So as you can see, the price action could be positive, even though the relative strength might be a little bit of a underperform. It's just that it is not performing as strongly as the S&P 500. So sometimes it's kind of misleading by just looking at the relative strength. Now let's take a look at the other sectors, starting with the semiconductor. You can see the semiconductor been quite strong recently, and notice that the relative strength also confirmed that. And the retailers also been showing some strength. You can see that the relative strength is also coming up. The home builder continue to show strength. Now the oil exploration is also showing some sign of moving upward here. We're starting a little bit of an uptrend here. And you can see that the relative strength is also starting to firm up. And likewise for the oil, you see the oil is starting to come up and the relative strength is also starting to firm up. And here the biotech, we see that the biotech is also broke out of this trend here, this pullback trend line. And right now it's kind of doing a little bit of a back test and starting to make a move back up. And also the relative strength seems to be firming. And the banking sector seems to be holding the support here on this trend line here. So keep an eye on the banking sector. We could see a little bit of an upward move here, although the relative strength didn't show much of a outperformance here, but it is firming up. And also notice the miner also making a little bit of breakout here. So we could possibly see the miner start making a move upward. And we are noticing the firmness of the relative strength. In the long-term bond, we might get to see a little bit of rally, maybe come up to this trend line here, up at this 96.5 level. And here's the regional bank. It seems to be holding this support here. So we'll see. Would it be able to move up similarly, to the banking sector that we saw earlier? It could be starting to make a little bit of a upward turn here if it could hold this support here down here at the near the 46 level. Although the relative strength is not showing sign of outperformance, but it is not showing any sign of deteriorating lower, seems to be holding firm. Now let's take a look at the yield curve here. Looking at the 10 versus the 2, we see that it is still down at this minus 0.35 level. And here with the 10 versus the 3-month, it is still down at this minus 1.18. So both the yield curve is still inverted. Now last week, the 10-year yield did come down a little bit. It came back down below this 4.33 level and sitting at 4.18. So we got a little bit of a pullback on Thursday and Friday. And the US dollar is still trying to hold this 104 level here. So if it chop around here and hold above this 103.82, I'm still looking for the dollar to come back up to this 105, 106 area. And you can see the dollar future is still sitting near this composite point of control, near this 104 area. Now, remember, we've been watching the oil to saying that if it could get above this composite point of control, then we're basically looking for a move back up to this 85 level. So let's see what it'll be able to push up to this 85. Certainly it is making a nice move here and broke out of this resistance here, somewhere around the 78.80. And not much have changed for silver. It's still hovering near this 23.30, 23.40 area. Now, last Friday, we did see gold make a strong move here, and it's trying to break out of the consolidation area. So we'll see, would it be able to come up and put in a new all-time high this time if it could break out of this consolidation range. Okay, let's take a look at the indexes, starting with the NASDAQ 100. As you can see, NASDAQ 100 made it up to this symmetry move near this 18,300. So now we're going to be looking for the possibility of this symmetry move here and possibly make it up here to this 19,160. And looking at the Russell 2000, the Russell 2000 broke out of this consolidation area, and right now it seems like it is trying to make a move up toward this 2138 area here. So look for a potential move up to this level. Not much have changed for the Dow Jones transportation. It is still trying to get up to the 16,730. And for the Dow Jones Industrial, we're basically still looking at this 40,000 level, this round number. Right now, 36,800 will still be the potential support on any type of pullback. And the S&P 500 closed with a new all-time closing high last week, and it almost closed up at the upper range. And the upper range for the coming week is between 5205 and 5193.70. And the lower range is between 5080.50 and 5060. We're going to be watching the round number at this 5200 area, which is also in confluence with the upper range, and also the 5100 level, and again in confluence with the lower range. So we're basically looking at this range, the upper and the lower range move for the coming week. Now watch this trend line here. If it breaks this trend line, then we'll be looking for the possibility of coming down on try to fill this gap and come back down to test this 5,000 area. And here looking at the E-mini S&P 500 future, we see that on Friday it left a poor high here. So this kind of tells us we should be on the lookout for another S&P 500 all-time high. And looking at the volume profile on this chart here for the ES, we see that it broke out of this consolidation of this balance area. So we're going to be looking to see would it be able to continue to push higher or come back down to do a little bit of a back test of this balance area edge here. If you'd like to see my daily plan for the E-mini S&P 500 and the SPY, go to my Substack page at smtraderca.substack.com. Now let's take a look at the index ETF, starting with the Diamond, the ETF for the Dow Jones Industrial. The Diamond did not make a new all-time high last week. It closed inside of this weekly range. For next week, the upper range is between 396.40 and 395.50, and the lower range is between 387.10 and 385.70. They are not that much different from last week, so for the upside, we'll be watching for a move to come up to this all-time high and try to tag this upper range that is also in confluence with a 1x of this extension, this balance area here. Now, on any kind of pullback, we could see it come down back inside of this range and also come down and tag this lower range of the weekly expected move. And for the SPY made another all-time high last week, and it closed near the upper range. And for the coming week, the upper range is between 519.50 and 518.60, and the lower range is between 507.10 and 505. So we're going to be keeping an eye out for the upper range and the lower range as potential target for the coming week. And the Q remained above this trend line here, and it closed above the upper range of last week's expected move. And for the coming week, the upper range is between 454.30 and 452.70, and the lower range is between 438.50 and 436. So we're going to be watching to see would it be able to stay above this 440 level. And if it does, then we'd be looking for it to come up and try to tag the upper range. But if it doesn't, then we could see a possible retracement back below this lower range here, because we're basically looking for the possibility of retracing back all the way down to this 413 area. Now, that's not necessarily say you're going to be doing, happening next week. But once it get into this balance area, then that's basically what the typical auction behavior will sort of have the price auction back down to the lower extreme. So we'll see what happens when it comes back down to this 440 level, if it comes down to this level next week. And also we notice that the IWM closed above the upper range of last week's expected move, the upper range for last week. And for the coming week, the upper range is between 212.30 and 210.90. And the lower range is between 200.80 and 199.50. So we'll be watching for a continuation move up to this 209.44 area here, this low volume zone here, and be watching for a continuation to move up here. Then if it's any kind of pullback, then we'd be looking for the possibility of coming down to fill this low gap here and that would also put the lower range of this weekly expected move to be in play. So, in summary, once again, we have multiple indexes making new all-time high last week. We have the New York Stock Exchange Composite, the S&P 500, the Nasdaq 100, and the Nasdaq Composite. Now, the Dow Jones Industrial did not make a new high last week, but again, we have multiple new high. So, this new high from the New York Stock Exchange Composite and the poor high from the E-mini S&P 500, they both are telling us to watch for a new high from the S&P 500 and possibly from other indexes as well. So until the market tells us otherwise, be careful in shorting this market. And if you have any question or comment, please post them in the comment section below, and I will try to answer them as soon as possible. So be sure to smash the thumbs up to help promote this video. And if you have not subscribed to this channel, click the subscribe so you won't miss any of my future video. Thank you for watching and good luck on your trading.